Boom. So yeah, so today what I really wanted to do was I wanted to go through your questions, right? I wanted to go through your questions. Just if you have any questions, drop it in the chat box as well. I'll try to do my best to go through that as well. But I really wanted to kind of use this session to go through your questions today, right? So that was my main focus. And then I'll probably touch on the charts and then just give you my outlook for the week as well. But yeah, I wanted to go through your questions. So if you have any questions, drop it here on Zoom. If not, I'm going to go ahead to Telegram and then I'm going to go ahead and answer your questions from there. So cool, let's just quickly share the screen. I think it's this one. Is it this one? Yeah. All right. Boom. Sweet. Lovely. Okay. So first of all, I'm going to go ahead and share the go for your questions. Where's Telegram? There it is. Sweet. So let's go through them. All right. So first one came from Arkel, and Arkel said, if Asian highs get taken out, but price continues on rising with no sign of reversing, do you now look for buy opportunities? And so yes, the answer to that question basically is yes, right? So if Asian highs gets taken out, so let me just look for an example, right? And this is what I do with all trades. So let me just use this as an example. I'm just going to go ahead and use this one here as an example, right? So in this case, Asia lows got taken out, right? So this is Asia low. So you guys should know like what this looks like, what this is, right? So this box here is the Asian trading session. So what happened in Asia, right? I never trade what happens in Asia. I know some people in the past they've looked for trades, right? And in Asia. And I always tell them, look, Asia is we use the Asian trading activity as our range, right? And I keep looking here, but you guys are basically this is much better. Okay, here. So the Asian trading activity is our range. We do not trade Asia because in essence, what does Asia do? Asia just consolidates. This is just consolidation, right? Like there's really not much movement here, right? And so let's just look at another session. Look, Asia again, right? It just consolidates. This is just sideways moving again. Asia again, it literally just goes sideways. This one was a trending Asian session, but normally Asia goes sideways. So this is another trending one. Let's look for some more examples. And then this is well, this is trending. That's trending. But we use Asia as a range. We don't use Asia as a trading opportunity, right? And so that's the first thing. And another thing, because I know a lot of you gonna ask is people say Asia starts from 11 a.m. and it ends at 8 a.m. Look, I don't care about that stuff, right? All I care about is I want to know what happens between 1 a.m. and 7 a.m., right? 1 a.m. and 7 a.m., right? And the reason I put it at 7 a.m. and not 8 o'clock or to 9 o'clock, for example, right, is because the early birds in London wake up and they start moving the market, right? And so we want to know what the early birds are doing. We don't want to be jumping in, or we don't want to be waking up or start marking up charts, for example, once things already start moving. You understand? We want to make sure we were up from at least 7, right? So 7 o'clock in the UK, by the way, and to see what they're doing first of all. So that's one. So so this is the Asia range, right? We know there's liquidity above and we know there's liquidity beneath, right? Because the people that move the markets, so in other words, who's sold down, where are they going to put their stop loss? Somewhere above here, right? And instantly I'll be looking at, look, if there's a double top here, there's going to be above there somewhere, right? So we know there's going to be stop losses in this area down here, okay? And then also the people in Asia who bought up, right? Where do they put where do they put their stop losses? Beneath here somewhere, right? Somewhere beneath here. And so we have banking numbers which are the 00s, 20s, 50s, and 80s. So when I say that, I mean, so for example, if this high comes in at 27, the next banking number is 50. So that's where most likely they might put their stop losses at, right? And then at the same time, if this low comes in at 95, the next banking number is 80. So just remember 00, 20, 50 and 80, right? So we know the next banking number might come in at 80, and so we know there's going to be stop losses down there too. So now, for example, right, what I don't want you guys doing is this. I believe some of you guys are doing this and you're probably missing out on trades, right? And this is why Arca asked this question. It's a really good question, by the way, right? He said if so let's just use this example. If the Asia lows get taken out, right, what what signs do you look for or look out for that tells you it's going to continue, right? So what people did back in the day, or what I used to do way back in the day, is once it broke out of Asia, yeah, Asia lows for this example, right? I will automatically be looking for rejections. I'm a rejection to go to the opposite side, to Asia highs, to go and take their money, to take their liquidity, right? And so sometimes so at the time, most of the time it was working, right? And then eventually they started well, not eventually, but then as time went on, they didn't reverse, right? So what I was doing before is I was always looking for reversals after it took liquidity. So after it took liquidity, so for example, it took our Asia lows down here with this wick, okay? So in other words, some kind of liquidity was taken here, right? Then I'll be automatically looking for reversals. You don't do that. Just because it's taken Asia lows doesn't mean it's not going to continue, right? And so what you would do, right, is you will look for either a reversal or a continuation. You're looking for both, but you need the market to show you what it wants to do, right? So just for example, in this case here, right, it took out Asia lows, right, then made a higher low, right, down here. But this is not what we look for, right? So this is why sometimes we miss these trades. I don't just look for a quick high low, right? I need this to come to a banking level first, at least 80. So for example, 80 was down here, okay, and down here is where I want to start looking for some kind of reversal sign, not necessarily up here, okay, not necessarily up here. And so, and obviously we have the overall higher time frame bias, right? So we knew it was going down anyway, so this is why nobody should have been buying. But technically, put it like this: if it breaks beneath, yeah, so if this low here, if it breaks beneath this low, for example, yeah, this low down here, yeah, down here, then it wants to continue down, right? If it starts showing reversal signs, so in other words, higher highs and higher lows, right, then it wants to continue up. It's as simple as that. So, for example, check this out. And this would have been a trick, so obviously, but this is why you look at the higher time frames, right? So instantly, this is what I'll do. The moment it breaks beneath an Asia low, take some kind of liquidity, even though this was not a proper one. So this is why we didn't go for this one. But just as an example, let's just pretend, for example, this happened at 80, right? What I'll be looking for is either a break of this high, yeah. Then I know that when this pulls back, this is going to be a pullback for a buy to go higher, right? Yeah, or a break of this low, right? If it breaks back beneath this low, then I know the pullback is going to be a continuation to go lower. Yeah, so remember that, right? I know this is not the perfect example because obviously this is happening. Like, well, it didn't happen here, but I'm just giving an example that if this happened at a banking level, then this is what ideally I'm looking for, right? So I'll mark up the low, mark up the high. If it breaks beneath the low, then I know the pullback is a continuation to go down, right? If it breaks above the high, then I know the pullback is a continuation, is a reversal to go higher. Yeah. So I will look for some examples, or I might post some examples in a group. Um, let me just see some examples. Okay, so just for an example, right? So I just want to give you an example. So this trade here, you can see it's made a higher high, higher low, higher high, higher low, a massive higher high, right? So this low here, yeah, this one over here is the low that needs to be broken, yeah. For example, for me to know, for example, that okay, this definitely is going to, when it pulls back, as a continuation to go lower, right? So this is just an example, right? So you see, even like for example, this like this one over here. So this is how you catch a move out of Asia. So you mark up the high, right? You mark up the low, yeah, easy, right? It pushes up. When it pulls back, it's testing this low. It failed to do that, right? It failed to beat the low, and so this is your indication that it's going to go higher. Not only that, but then it then broke above another high, right? So I know when the pullback happens, yeah, this is a continuation to go higher. Do you understand, right? And normally it will pull back into an imbalance or a last down close candle. So in this case, there was an imbalance here, and there was a last down close candle. This whole from the top to the bottom is a last down close candle, and so it's pulled back into there, and then it's rocketed up, right, to near enough to our banking level, for example, right? So just remember that. Remember continuations and reversals, right? So this is why I always say it needs to beat the short-term low, or it needs to be, so in other words, for me to take this lower, for example, it would have had to beat this low. If it had beaten that low, then I know the pullback is a continuation to go lower. You see it, but it didn't do that. It broke above the high, so I know the pullback is a continuation to go higher, right? And so I always use that. So whenever it breaks out of Asia, right, I'll mark up the current high, the current low, right? And whichever way it breaks out, then I know the pullback is to go, for example, in that direction, right? So another word, let me see if I can give you another example. Um, mm, This was just a pullback near enough to a banking level. Yeah, okay, cool. Let's have a look. Let's see this one here. Yeah, this one snatched Asia highs instantly. So nope, not that one. Okay, so something like this, for example, right? So can you see, for example, London opens, right? London opens down here, right? And now it starts to drop, right? So instantly, this is exactly what I'll do, right? So I'll mark up the low over here, and it's always the body, it's never the wicks, right? And I'll mark up the high right down here, and I'll just wait. It would either break beneath here, then I know that the pullback is a continuation to go lower, or if it will break above, then I know the pullback is a continuation to go higher. Can you see it? So try not to like complicate it. Literally just try not to complicate this continuation, right? Or reversal. It's as simple as that. You mark up the highs and the lows, and whichever way it breaks out, so in this case it broke out upwards, you know the pullback is a continuation to go higher. It pulled back into a last down close candle, tested it a few times, so there was quite a bit of mitigation, and then it pulled off, right? And then it pulled off. So yeah, hopefully that answers your question, Arkel. So basically, in other words, what you would do, right, is if it's still, in other words, if it's making higher highs and higher lows, it's going to continue going up, right? If it's making low lows and low highs, it's going to continue to go down. And obviously, we tie that in with the higher time frame. So the higher time frames might be saying it needs to pull back first before going higher, right? And so this is why if it had to pull back further down, for example, right, like this one over here, okay, I will not be looking for buys if I know this thing has to pull back now. You see it? And so we're going to go over that when we look at GU on a higher time frame as well. So cool. Hopefully that answers your question. So look for either a continuation or reversal, whichever one is given to you. You stay with that bias regardless. Yeah, you stay with that bias regardless. Cool. All right, let's go to the next question. Hopefully that answers your question, RKL. If it doesn't, then let me know. Then I'll see if I can go a little bit more deeper. Cool. If it answers your question as well, just let me know in the chat box. Cool. Next one now. Let's double check chat box real quick. That helps. Thank you. Will that be in a 1 minute time frame? So will that be on the 1 minute time frame? So yeah, so what I was looking at was the 1 minute time frame. Yeah, that's correct. That was very helpful. Okay, cool. Lovely, lovely, lovely. Cool. All right. So okay, cool. Tyler said, please show us in detail how you spot imbalances in the market and which timeframes are best for finding them. Yeah, so okay, cool. Imbalances in the market, right? So let's go for what happened on yeah, let's go for this one, right? Oh, and I need to explain something about imbalances too, actually, because I feel like some of us were getting a bit too caught up on the whole imbalance thing, right? And so and the reason I say that is because, so for example, let's just say when it comes to imbalances, right? So let me just see if I can give an example of an imbalance anyway. So I've kind of have it already, but let me see if I can give you another example. So let's just use yeah, I just use this one over here. Cool. So when it comes to imbalances now, right? An imbalance is something like this, for example, yeah. So okay, yeah, let me use this as an example. So okay, I'm just trying to look for a really good example. Okay, really good example because I want it to be nice and clear. Okay, yeah, let's just use this one for as an example, right? So with an imbalances, you have to with imbalances, what you need to know is that when price is trading down, right, it needs to be traded down cleanly. So in other words, what happens is this. So this candlestick here, okay, this one over here, the wick of it. So let me use the arrow tool because it might be a bit easier to see. Boom, and take this off. Boom. All right, cool. So where are we? Down here. So here, down here, this wick over here, okay, needs to touch or the body or the wick of the previous candle, right? So as you can see, this wick over here tap the body of this candlestick over here. That's one. Okay, so same thing again, right? So I'll do it again. Now this candlestick here needs to touch the previous, so this one over here, this candlestick over here, the body or the wick, right? Whenever it touches the body of the wick, that literally just means that there's been even trading, okay? Even trading, yeah? The moment it doesn't touch the body or the wick, yeah? So for example, check this one here, right? The moment this candlestick here, it did not touch the body or the wick of this candlestick here, there's a small little imbalance down here. So I'm going to quickly mark it out for you down here. There's a small little imbalance down here, right? Here, a small little imbalance is created, right? So down here, a small little imbalance is created in this little gap that I've just marked up. So I marked up the body, right? If there was a wick, I would have marked up the wick, and I've marked up the wick, right? So the highest point and the lowest point of these candlesticks here, right? The moment it doesn't touch, this one here doesn't touch the body of the wick or this candlestick here, there was an imbalance here. So in other words, there's inefficiencies in the market. And so what price would normally do is it would trade up into the imbalance, right? Balance out the area and then continue to drop down, right? And then look at this. Check this out. Down here, for example, you see this little big push, right? But the wick didn't touch the wick. Wick didn't touch the wick, or the wick didn't touch the body. There's another imbalance there. So what happens? Again, so you mark up the very lowest point of this candle, right? And you mark up the very highest point of this candlestick over here, right? So I'm just going to drag it out to the side so you see it a little better. Cool. And then what would happen? Price would then trade up into the area, right? Where there's an imbalance, balance out the area, and then continue down. You see it, right? So that's just imbalances for you. And so normally this is why I like using imbalances and last down close candles or up close candles, right, as entry points, right? Because you know they need to trade up into them, right? And then once they trade up into there, then they can continue, right? So that's an imbalance first of all. And now when it comes to knowing what imbalance to go for, right? So this is what I wanted to talk about earlier. When it comes to knowing what imbalance to go for, this is what I do, right? So let's use this one as an example, because this was the example, right? So first of all, you look at the move up. So you look at the leg, the extension, the leg up. So this whole move up, yeah, is one leg expansion up, right? And so you look at where the lowest point or the lowest point, or the lowest imbalance in this whole leg. So obviously you're going to get imbalances along the top, yeah? So like imbalances here. So if I zoom in, right, you get imbalances here between this kind of six wick and that one. Balances here, imbalances there, all of this, all of that. I don't care about those ones, right? All I care about is I like to find the lowest imbalance possible, right? And so, for example, check this one. This one out here. So there's an imbalance right at when price expanded from this kind of six wick to that one here. That's the first imbalance, right? That's the lowest one on that leg. The next one I can identify was not this one, right? So this one here, because look, price traded into it, right? And then continued higher, okay? So the next one is down here, yeah? Up here, up here. The next one's up here. So you can see down here, there's an imbalance between this kind of six wick or body and this wick over here. So let me quickly mark it up. Right, boom, down here and down here, right? So what did I just do? Let me just double check. I don't. Cool. Anyway, it doesn't really matter. Cool. So down here, imbalances are here, right? This is where the imbalance is down here. So now we've identified two imbalances, right? So we've identified the one at the very low, the lowest one possible, and we've identified this one, okay, after this accumulation, right? So after accumulation, this one was formed and then it just exploded up, right? So this is what some people do, and this I'll show you what I do. So some people would wait for the lowest one possible, right? So check this out. First of all, yeah, so they'll wait for the very lowest one possible down here, this one over here, okay? But price doesn't need to come down there yet. It doesn't have to go down there yet. It can come down there in a week's time, in a month's time. It does not need to go down there yet. So when it comes to imbalances, yes, they need to fill the imbalance, but they don't have to do it right now. You see it, yeah? And so they don't technically have to do it right now, yeah? And so that means, yeah, I'm going to go for 2 bites, yeah? And, you know, a lot of traders won't even tell you this stuff, right? But sometimes I wait for the lowest, right? If it's completely obvious, if I see a last down close candle and I see then imbalance down there as well, you know, and I'm seeing everything's pointing towards that section, like all time frames are pointing towards that lowest section, I'm waiting for that imbalance, right? But if not all time frames are pointing to that direction, down here, I'm not going to wait for this only. I'm going to probably have 2 bites at the cherry. And so, like I was saying, not all traders will tell you this, but because of the way we trade, right? Sometimes it might take us 2 attempts to get the trade, and then it bangs, right? Sometimes it might do that. Even if you lost this trade, for example, you might be losing 1%, 2%, 3%, whatever your trading plan is, right? But then once it gets down to here, this is when you catch it, and then you make your 50% or 40% or something like that. Do you understand? So just don't be afraid to take the trade, right? I'm not talking about take the trade all the way up here. This is ridiculous, right? We're looking for there's after this accumulation phase, there was a last down close candle. So then drawdown here, and there's an imbalance here. I'm going to take a chance there. You see it? Right? And hopefully that helps. And I'm being as straightforward as possible, right? And so you take your chance. You take it. Because if you miss that trade, you'll be left chasing the trade, right? If you miss this trade over here, you'll be left chasing the trade, right? And so you make up in your mind, you make that decision to say, look, I'm going to have 2 bites of the cherry. If it stops me out here, I'm not going to enter the trade until when they run out this liquidity, tap into this imbalance, and then I'm going to give it a second go, right? If that's wrong, I'm going to zoom out to a higher time frame and find out what their agenda is. Yeah, so that's that's what I would do. I would look for 2 bites of the cherry, unless obviously if all of this was cleaned up already. If all of this was cleaned up, then I wouldn't be looking for this one. I'll be looking for the one at the lowest point, right, at the entry. But yeah, so that's the first thing, right? And so this is exactly what I would do. I would always look, okay, for the lowest imbalance, right, and the one just before it, and then I would look at different time frames to see what's actually happening. Right, so if I'm in a 1 minute, I go to the 5-minute time frame and I look at what's happening on the 5-minute time frame. What do I see on a 5-minute time frame? Okay, I'm seeing this is there's an imbalance between this candlestick wick and this one here. There's tons of last down close candle. There's last down close candle here. There's more last down close candles here, right? So this is where most likely they're going to return to it before taking off, right? Down here, let's go to another time frame, 50-minute time frame. What's the 50-minute time frame saying? So on a 50-minute time frame, there is no imbalance down here. Okay, well, am I in the right place? Let me just make sure. Where was I? Oh, down here. Cool. Yeah, on a 50-minute time frame, right? What do we see? We see a wick, right? We see a wick that snatches liquidity beneath here. Yeah, beneath this low over here. Then we see the push up. Okay, then we see a pullback. We see more accumulation. We see a last down close candle. Everywhere's pointing to here. Do you understand? Let's keep going. Right. So this is what I was talking about when you go for the time frames to see which one looks the best. Right. And then look, 30-minute time frame as clear as day. You get this last down close candle. There is nothing down here. There's a wick that takes out liquidity. Right. There's a wick that takes out liquidity. So I don't know. Can you see it? A wick that take this wick. You can see the wick. Anyway, this is where it ends down here. Takes out liquidity beneath this low and then pushes up. And then 30-minute time frame is saying here, this is what you need to look out for, right? This is that massive move up, right? And so this is that last down close, because you have to think about it, right? You have to look at what they're doing here, right? To retail traders, what do you see? And I know I'm being long, but this whole session was literally meant to be like a Q&A session, right? So like to a retail trader, to you back in the day, what would you have done in this situation? You would have seen this as a rejection candle to go lower, yeah, to go lower, and then you would have placed some sales, right? It took your money, right? This is where they tricked you down here. This is where they tricked you to go on short down here, right? And then it took your money, right? So this is where they need to return back to you to mitigate their positions, right? Let's go. 1 hour time frame. 1 hour time. What's the 1 hour saying now? Where are we? So, but down here, cool. 1 hour time frame. Ain't nothing happening down here. Nothing's happening down here, right? But everything's happening. Everything's pointing towards there. Now we have this last down close candle. Yeah, we have this imbalance down here. So everything's happening in this section here. So hence why this section here is where I'm going to take my first bite of the cherry, right? And then if that flops, then I know they're going to the wick. You see it? Yeah. So yeah, so that's how I would play imbalances and where to get your entry from. And yeah, it was upsetting, you know, well, not upsetting really, but the retail traders won. So basically, I'll show you this line down here. This line, let me zoom out here. You know what we're done. Let me just zoom out a minute. Okay, sweet. Yeah. So this line, this bottom line here, and this one over here. Yeah. So between 54 and 55, right? This is where I wanted price to come down to tap into the imbalance, and then we would have caught the most righteous trade in life, right? This would have been a crazy trade, the craziest trade, right? And obviously double bottom, so it gave us hope, thinking it was going to run it. It didn't do it, but ultimately this here is where I wanted to get tapped, which is that imbalance. I just literally went through all the time frames and showed you that that area was really significant, right? That's why I wanted to get tapped, and then we would have targeted 1.3800, right? And I'll go over why 1.3800 is the target, right? So and then what it did do, right? So we did obviously we caught the trade late, but what it did do is it did go up. Do you know what? I can't even see this. Give me 1 second. What's wrong with this thing? Okay, nothing. Cool. So this trade did also, it's because this is in a way. Give me 1 second. So that trade went up 93 pips. Guys, that would have been one of the best trades ever. One of the best, cleanest trades. 93 pip trade. You would have had a small stop loss, maybe 5 pips, and that would have been a crazy amount of risk to reward. So we just literally missed it, the perfect entry for that. So that's fine. So that, yeah, it happens sometimes. Like people are saying, and like I say, look, retail traders need to eat too. They caught the double bottom and they bought the living. They bought everything out of that trade basically, right? And they just made tons of peas, but that's fine. Cool. So now hopefully that helps out with imbalances and knowing what imbalance to go for, and yeah, hopefully that helps out. Okay. And if that does help out, let me know in the chat box as well. And yeah, it's all about going through the time frames. What are the different time frames telling you, right? This is as clean as day. This is the cleanest in life, right? This here is the cleanest in life. So you know they have to return, and if you know they have to return back down there, easy here. This is where they, because this would have been, consolidation, right? And then this would have been a rejection candle to go lower. They run you out. This is the place right down here, right? So this is why I target here. This is why I target this here first, and if that flops, then I'll target beneath this liquidity down here. Cool. Audios. Let's quickly go back to the chat box. Not chat box, the Telegram. Okay, cool. Cool. Next question was for Megan. So I've read these questions. This one's a bit of a long one, but yeah, I'm gonna see if I can break it down. So how can I tell the difference between a pullback and a market flow switch? Oh, I think I've explained that already. So I explained it in the beginning about whether it beats the high or the low, right? Whether it beats the high or low, very, very important, right? So I explained that in the beginning. So that's how you know whether price is going to continue or it's just a pullback, continue or reverse, sorry. How can I better pinpoint where the price will pull back to, right? So I just given that example just now as well. So you would use an imbalance or you would use a last down close candle, right? What else is a better point, Professor? How can I determine better points to place stop profits? Ah, yeah, that's very interesting actually. So when it comes to stop profits, right? So what I do is if I'm swing trading, for example, if I'm swing trading, yeah, this is, it looks messy, but oh well. If I'm swing trading, yeah, then I would just keep a 2 pip stop profit. And I will hold. Why? Because put it this way, look at this push up, right? Expansion up or pull back, right? If I decide to put any of my move any of my stop profits in and above any of these lows, I would have been taken out. You understand? And so hence why if I'm going to swing trade that thing, I'm going to put a 2 pip stop profit above my entry, literally just 2 pips above my entry, and I'm going to leave it right till it goes and snatches the liquidity. If I want to secure the bag, and if I want to make sure I don't give nothing back to the markets, right, then I'll put it beneath these lows, right? Beneath these lows, and I will be happy with that, right? And so if price decides to push higher, right, I'm not going to be upset because I moved my stop profit heavily into profit because I didn't want to give back anything to the market, right? So you can always put it beneath lows, but just know that when it pulls back, it will stop you out. Yeah. And so and in this case, for example, down here, you see how there's the imbalance down here. Yeah. I'm so just giving you a few more tips. I'm not gonna watch this go up. Let's just see how many pips it went up. All right, let me show you. So from the top, so from entry down here, right, to this top, we're talking about 114 pips, right? I'm not going to watch this go up 114 pips and then just leave a 2 pip stop profit. And me knowing that there's an imbalance right at my entry point. There's an imbalance at my entry point down here. Imbalance right here. I am not going to just leave this. So normally what I will do is when price pushes up, okay, beats the high, yeah, beats this high, and then pulls back to my imbalance. I'll wait for it to do its thing and then push up higher, okay? And then I'll move my stop profit. If price does not come back to this imbalance at my entry, pushes up 114 pips, I am not going to leave a 2 pip stop profit or not risk free my trade. That's absolutely insane. I don't know, right? What I will do is I'll put my stop loss beneath a point where price should not pass. Yeah. Like, so if they rejected from here, right, I'll put my stop loss somewhere down here, right? Down here. As simple as that, right? If I'm swing trading, obviously, if it's an intraday thing, then you can throw your stop loss, you can put it beneath a low, you know, you can wait for it to show you a smart money reversal. So in this case, this was well, not potential, but this was, it took out the equal high, so it was going to go higher, took out equal high, so it was going to go higher, and then it started showing you a smart money reversal down here. Okay, cool. I'm gonna put my stop loss beneath this low over here. If it taps me out, I'm good. You see it, yeah? So yeah, so just as an example, just don't wait for price to come back and take you out, right? So if it's moved, you know, 100 pips, make sure you're taking something off the table, man. Honestly, make sure you scale or something. I think, did I answer that question? Hopefully I did. Hopefully this is helping you. Like I said, I want this to be a Q&A session today. And so hopefully this is really helping you. And if it is, just drop it in the chat box so I know. If not, I can just literally go through the charts and show you my my analysis for the rest of the week as well. So I think I'll answer this one because I can't scale off as my volume. Okay, another thing as well is if so Megan said, because she's asking me that question because she can't scale off because her volumes are low. So in other words, the trading account is low, doesn't have enough money to place a trade where you can actually take some partials. So if that's the trading account, if your trading account isn't enough where you can take some kind of partials, so I wouldn't really take that trade because you can't scale off, and so then you're faced with that dilemma of, okay, should I move my stop profit deep? Should I, you know, I want to make sure I secure the bag on something, but I can't, so I have to move my stop profit. If I move my stop profit, then I can get taken out on a pullback. So yeah, if I just suggest or recommend that for example, if you can't, you know, scale off your position. So when I say scale off, I mean just close off some of your position. Then I wouldn't be trading that pair, right? So although it gives tons of returns and everything else, then I'll probably avoid that pair for now until I can actually place a bigger lot size to scale off a position. Cool. Also, how do we pinpoint which spots of liquidity price is going to and in which direction? So yeah, I think that's just like market flow. So for example, if there's liquidity beneath, right, and there's liquidity above, how do you know which one is going to go for? And it's just market flow. So look at this, price is making lower lows and lower highs, right? So it's going lower. The moment market flow switches, so annoyingly it was from a double bottom, so there was a higher, you see this little push up, broke above the high, yeah, broke above the high, higher highs, higher lows, higher highs, higher lows. We are obviously going upwards to take out this liquidity. So market flow is going to be your best friend with that. So if market flow is down, we're going to seek some kind of sell side liquidity. If market flow is up, we're going to seek some kind of buy side liquidity, you know, on the top side. Cool. Cool. So I remember the difference. Another thing is good moments for entry. So I've already explained the good moments for entry. So you always enter at a last down or up close candle, or an imbalance, or I'd say just an institutional candle, because with institutional candles it can be last up or down close candles, and it can be bearish and bullish order blocks as well, right? So you can enter those two. Let me see if I can show you something. Actually, I want to show you something because this always happens, and then this is how you know price is going to be heading lower. Let me see if I can show you something. It might be in a different time frame. Okay. See if I can show you something. I want to look for a clean one. Let's see if I can see it. I'll just use this one as an example. So yeah, I use this one as an example. It's not the cleanest one, but I just wanted to use this as an example, right? So normally what would happen is this: once you when price is ready to reverse, so in our case we want it to run out liquidity first. Okay, we don't want to see double tops and reversals. So I'm not gonna lie, retail traders ate twice. They ate down here and they ate up here as well. So yeah, they literally feeding the retail traders. But yeah, normally what happens is this: once it gets towards the low, near the low, right, that needs to be broken. So in this case, I'll just use any of these ones, right? They'll normally produce like a bearish order block, right, to trick people that is going to go higher, yeah, and then just break down. Normally they will just break down, for example, right? So normally they will just break down, but in this case, obviously trade a bit higher. But normally they will break down from here, right? Then you know that when price returns back, so in this case, then you would use this one because this one went higher. When it returns back, yeah, this is where you get an entry point, and then you set it all the way down, right? And then you just continue to hold, right? So always look out for bearish or bullish order blocks, right? Literally, and you look out for them where retail traders would normally buy. So in other words, what would retail traders do in this point? So down here, yeah, this would have been a high low for retail traders, right? This would have been a high low. They were going for buys, we going for sales, right? And then this one here, again, look, push up. So this is what they would have seen. They would have seen that this pushed higher than this high, came back down. Bullish, well, to us, it's a bearish order block, right? But to them, it's just a rejection candle to go higher, and then it pushes down again, right? So just look out for those for entries. So I like these. For if I miss my banking level, if I miss my imbalance or last up close play, I look for bearish order blocks like this, and then once it returns back to it, so it should break the low, like it's done, break the low, then return back to the bearish order block, and then it should trend all the way down, right? Cool. Let's see what else is here. I know there's some massive chunks here. This stop loss because it's seen. So maybe the problem is my stop loss. I think I've answered these ones. Okay, what else there? Okay, it's definitely not entries. It's my stop loss not being big enough. Okay, so my stop loss not being big enough. Okay, there's no question there. Cool. Hey, Harrison, what time of team call? Can you break down your swing trading strategy from high time frames to low time frames? Yeah, sure. So, okay, cool. So I think this is the last question. Unless there's any questions in the chat box, then this is the last question. Can you show us a few trades you've taken and the reasons why why for taking them? Yeah, okay. I kind of show them every single day, so I'll go through some of them. I'll go through the first question first. Okay, cool. So let me minimize this. This is in the way. Okay, cool. So let's move down. All right. So let me just quickly break down this one for you first of all, right? So I've already broken down why we're in buys, for example. So this is just an example. This trade down here, yeah, was a trade to an imbalance, right? So this whole move up, right? So this move up, this push from this low to this high, right? This was the imbalance area. So in other words, let me quickly show you what's going on. So I believe it was on the 15, right? So let's go 15-minute time frame. Let's see if I can find it real quick. Yeah, there you go. 15-minute time frame. As you can see, there's an imbalance here. Everything else has been cleaned up, right? Everything else has been cleaned up, and there was an imbalance here. So this was a potential opportunity, right, to take this trade. And so this is why I was in this trade, because it traded into the imbalance. It then worked the imbalance, right? Worked the imbalance. On some people would have said this was a Wyckoff accumulation and stuff like that, but it worked the imbalance, and then it pushed higher. And then this trade over here, this one, this low. So let me just go to the 1 minute time frame up here. So what did we see? What did we see on this one? So once it decides to load up, cool. So look at this one. Look at what's happened, right? So just our normal our liquidity run. So we trade to Asia highs, yeah, which comes in at 27. The next banking number is 50, yeah. The next banking number is 50, right? So remember I said 0, 0, 20, 50, and 80, right? So we're trending higher. Yeah, higher highs and higher lows. So then whenever if you miss a trade like this, you make a decision to jump in off of an imbalance or a bullish order block, right? And so once you've done that, for example, you trade all the way up to Asia highs, right? You will scale off some of your position at Asia highs. You let the rest ride to that next banking number, which comes in at 50. Okay, so there's they create a double bottom over here, right? So they want to go lower. Well, they're going to use this as a target point first of all, right? And then it trades higher to our banking level 50. As you can see, this is that 50 number, 3750, right? So this is our banking number. I know they've left all kinds of equal lows below, right? So you have to ask yourself, where's the money? The money's down here. They've left equal lows. And by the way, when price returns back down here, I'm not entering the trade, by the way, right? Because when they were trading lower, there was no liquidity here. And so when they traded into this here, this was just going to be a balancing of an imbalance or a rebalance, rebalancing of this area down here, and then we would have trended higher, right? But now there's liquidity down here. This is not my entry point. This is a target point, right? And so then I will literally wait for this to be trade. I will hold this trade basically to go as low as down here, yeah, down here, or for at least them to run out this liquidity, break above a short-term high, and then take it higher, right? So just want to let you guys know that before you get played, right? So cool. It gets to the banking number up here, which is 50. I jump in my trade. Why? Because this is where most likely bank stop losses are going to be, right? And what I really liked about this as well is that they consolidated beneath our 50 level, yeah? They consolidated beneath our 50 level, showing that there was exchanging of contracts, right? So in other words, what's happening is when somebody buys, somebody else must sell, right? So retail traders what are they doing at this point, right? They're trying to sell. They're trying to sell early, right? They're getting all kinds of double tops. They're getting consolidations. They're getting everything, right? So they're trying to sell early, right? When it pushes up into our banking number, right, and it most likely hits their stop loss, yeah. And when it hits their stop loss, yeah, for their sales, they buy their orders back, right? But like I said, whenever you buy or sell, somebody else must be on the other side. And so when they're buying their orders back, who is selling? We are selling. You see it, right? So exchange of contracts, they buy their orders back because they get stopped out. So when they're trying to sell early, and when they get stopped out, it closes. They close off their position by buying it back. They buy it from who? People who are selling. Yeah, us. So we're selling. Yeah, at this point at our banking level, which is also most likely where these people, Asia, have put their stop losses. Yeah, Asia banks, not Asia people, and not just people who trade in Asia. I'm talking about the people who move the markets, you know, so the Asian banks, right? Most likely where they put their stop losses. So we want to enter when they're being stopped out. You see it? Because it's a clean entry, right? And so this is why I'm in this trade. And then I target the lows. Where am I targeting? This was the initial target. As in when I say initial, I just wanted to see it break beneath here because there's an equal lows down here, right? And then there's all kinds of imbalances along this leg. There's the last down close candle here, right? Last down close candle over here. There's a last down close candle over here. So that could be a target, right? There's equal lows over here. This is going to be a target, right? And there's also an imbalance beneath here. This is also going to be a target as well. Okay. So yeah, this is what I'll do. And I'll just literally just continue to hold, and it's dropping down. It's doing that, and it's completely fine. Cool. So that was, for example, why I took that trade. Cool. I think, did I miss the question? Who was it, man? Oh, top down analysis. Okay, cool. So please, GU top down analysis real quick. Okay, so GU top down analysis. So this is how I would break down everything. So from the higher time frames, that's where I derive all my bias first of all, right? So instantly, if I look at the daily or even I look at the monthly, let's look at the monthly. So what do I see? What's happened on a monthly time frame, right? So trending lower lows, lower highs. I see that. Equal lows created, and what's beneath those equal lows? Money, liquidity is down here, right? So they generate equal lows. All kind of retailers jump in with all kinds of buys, and rightly so. Like monthly time frame, this is tons of pips, right? But there's all kinds of liquidity, right? This is about 1,400 pips, right? And so now there's tons of liquidity down here because there's equal lows down here. This small little run is like a little shallow run, but they need to stop out everybody who is selling, who is buying at this point, right? All kinds of banks, right? And so they snatched that liquidity with this wick over here, this dangerous wick, just snatched everything, right? And then they broke above the short-term high, right? That took out this liquidity down here, this liquidity over here, right? So it's broken above the short-term high. This is the short-term high that takes out with this wick all of this money down here, right? So this is a smart money reversal on a monthly time frame. So GU is very, very bullish, 100% bullish, right? Okay, cool. And then we're trending higher. Look, higher highs. This way it took out the short-term high, pulled back into clean up this imbalance and continue to push. Look at this monthly time frame, right? Then we get a bullish order block. We're bullish sorry, yeah, bullish order block down here, right? So this bullish order block was created, right, not only to trick people to go lower, right, but also to clean up this imbalance between this wick and that wick. Yeah. So can you see if well, I can't zoom in anymore. When this wick never touched the wick or the body, right? So there was an imbalance created there. They traded into the imbalance and then they continue higher. GU is very bullish, right? And what else do I see? I see a last up close candle before the down move, right? So this is where they're potentially got in drawdown. Yeah. So they're in drawdown there because look at this. What does this look like? Right? We trade up, we pull down, we push up, okay? Yeah, trick people into thinking, because this is what retail traders are thinking right now, okay? So they're probably thinking, okay, look at this low, look at this low down here. This to them is some kind of zone, yeah? It breaks above the zone, breaks above the zone, pulls back. This is what they're taught. Rejects, because this is what they're taught and this is what they want to see. It rejects, okay, and then this is their indication to go all in and buys, go push higher. But then it gives them a little piece. Well, this is a monthly time frame, so they would have got a nice little piece, right? And then it comes down to snatch out their stop losses, right? So let's quickly move that because it looks dodge now. Because yeah, cool. So yeah, so I know there's a last up close candle here. Yeah, so they're potentially in drawdown here. So where is the money? The money was down here. Where are they in drawdown? Down here. Okay, they've taken the money. Now they're going to mitigate their position up here. Hence why I'm very bullish on GU. Yeah, and so now when I look at it in every single time frame, I'm seeing why they're very bullish, right? Cool. And not only that, let's go now to the 1 weekly. Okay, weekly time frame. What do you see in a weekly time frame? So now let's break it down. We know what's going on already with all of this action down here. Okay, we're seeing very bullish activity, higher highs, higher lows, breaking above short-term highs, everything else. We're seeing, we're seeing last up close candles over here, right? So let's see this is what we see. We see a last up close candle here on the weekly. These two candlesticks, one candlestick. Down here is the open. Here's 50%, right? We're seeing a last up close candle here, right, on a weekly. On a monthly, the last upwards candles from here. Yeah. So we're seeing so everything so far is drawing upwards, right? What else do we see? We see imbalance between this candlestick wick and that one, between this one and this one over here. Okay. So once again, everything is pointing upwards, right? So now let's go lower. Let's go to the 1 daily. Let's go to the daily. When I say 1 daily, like it's just the way they make you do it on training view. You have to put 1 and then day. Cool. So now what do I see in this move up? Because you have to look at so the reason I'm investigating this one area here is because this is the move down, the leg down, right? So I need to investigate this whole leg down from the very top. Hence why I'm literally investigating this move down, right? And what's happening here. So now what do we see? We see a bearish order block on their daily time frame, which is very powerful. Okay, so we know that they're not just going to stop at an imbalance; they're going to push to this bearish order block because this is where they're in drawdown. And so this was what I was trying to show you an example, yeah, of before that. Normally, when they want to push lower, they'll produce a bearish order block. So just remember this: they push higher, take out liquidity, produce an order block. Yeah. So what's happened on a lower time frame? Well, you can see it here actually really they trade into that bearish order block and then they go lower. You see it. So just remember that this, yeah. And also when they trade this bearish order block as well, look at this order block. It pushes up into the open of this last up close candle. So in other words, they mitigate some of their positions, right? They mitigate some of their positions and they load up on more positions, cells, right? Because they're drawdown in this candlestick here. So but we're going into lots of detail. So hopefully you guys are still, well, are you guys still here? Let me just double check. I don't know whether you guys are still here and whether you guys are still awake. But this is training for you. You have to know how to investigate. This is how I investigate, right? So hopefully it's helping. Yeah, cool. Yeah, and so I forgot what I was saying now. Still here, cool. And is it helping? Because I'm trying to give you proper detailed information, right? And so this is why literally I said I want to do a Q&A today, give you as much information as possible. Cool. Okay, so now let's my train of thought. Cool. So yeah, so we know, right? They're going to this bearish order block because they're in drawdown here. They are in drawdown over here. Okay, so they need to mitigate that position, right? I'm gonna say mitigate. I mean that they need to trade up into it, close off some of their buy orders in profit. Do you see? That's what I mean, right? Close off some of their buy orders in profit. So we know they're going there. And so when I see imbalances like this, I don't care about it. They can reject from it the first time, they will come back. If I see imbalances like this, I do not care. I care about this bearish order block, this institutional candle, yeah, and this institutional candle, yeah. So that's that. So we're in the daily time frame. So now where is GU pushing? Look what GU's doing. Look, equal highs, break higher. Equal highs, break higher. We are, look, they equal highs, trick you into going. Well, when I say trick you, I mean like these are still good short positions, like the probably a couple hundred pips, right? But equal highs, they push higher. Equal highs, they push higher. Every single time they're producing higher highs and higher lows, right? And so they've rejected here a couple of times, which is not what I wanted. But as you can see, so far we're bullish all around. 4-hour time frame. Okay, 4-hour time frame. So this is where it gets really juicy now, because now we're trying to find out what's going on here, right? So look, check this out. Okay, so an example of a continuation, right? So look at this, equal highs, yeah, or relative equal highs. Okay, when I say relative, I mean like they didn't come exactly to the same point, but it's equal. There's liquidity up here, right? Because it's close enough, right? And look, they generate equal highs, right? They break lower, push down into an imbalance, last down close candles, push up, yeah? Take out the liquidity above here, right? So now there's two things. Price will either continue trading higher after a pullback, or it will break beneath a short-term low, pull back and drop, right? So this is the short-term low that they need to be, right? Down here. They trade into it. So in other words, they test this area, they trade into it, right? And what do? They fail to beat the short-term low. So this is automatically they want to continue going higher. If they broke beneath this, right, then the pullback is a pullback to sell again, right? So they break below, they pull back into like a last up close candle or an imbalance, and then they drop price down. Yeah. So, but they failed to do that. So this is why. So now, not so now, because I already know from the high time frames. But for every time frame is telling me G is going higher, right? And what else do they do now? Yeah. So they fail to beat the low, right? And it's always the body, not the wicks. Yeah. They fail to beat the low, and yeah, you know what's happening here. They generate equal lows to get people to trick them into go higher when they want to run out liquidity, right? So we were all over this as well, and then they push higher. Yeah. They push higher. What do? They generate equal highs. So we know they want to go higher. Okay. Then they break down, just like what happened here. Look what's happened. They break down just like they've done here. Then they run out the liquidity. Well, it's a shallow run. They're going to run it out properly, right? And then they start pulling back. Where are they going to pull back to? So look, you have to look at your entry points now. Okay, they're going to pull back to an imbalance or a last down close candle, or both if they're at the same point, right? So what do we see? So we investigate this leg up. Yeah. So what do we see? 4-hour time frame, as clean as day, right? They traded into the imbalance already that was generated here. This wick and that wick, they didn't tap each other, right? Imbalance here, they trade into it here, okay? Trade into it, balance out the range, and then they push up. But in doing so, they've created a bullish order block. So this is where they're going to go to, right? And so this is what you do with a bullish order block. So I know somebody said I should use the pitch. Was it the pitchfork? This maybe, but I'll test that out another time. Cool. So bullish order block. Oh, I did it wrong. Bullish order block, right? From the body, from the top basically to the bottom. That's what I'm saying. Top to the bottom. Top to the bottom. Yeah. 50% of that is where most of the volume of that sell is, right? Cool. So we've marked up 50%, just like we'll do with any institutional candle, right? And then this is what you would do, right? Price will trade into, so there's a few different things, right? So I'm going to point out two things. So price will trade into, not this one, right? We don't care about this one because there's so much in this. There's so much in this, but look, I'm just going to make this session. This is a proper detailed session, right? Look this is what retail traders are doing. Yeah, this is what if you don't know what a retail trader is basically everyone who starts off trading, and you start learning online or from YouTube and stuff like that, and all this like breaking support resistance, RSIs, all this nonsense, all of those things basically, and kind of trend lines, trend lines, and stuff like that. All of that stuff, right? So if you trade like that, you're a retail trader, right? So, and not only that, retail traders enter in, right? They enter the trade at the 61.8 Fibonacci, right? This is what they're trading. Oh, it's the golden zone. That's 61. Like it gets there, you buy. put your stop loss beneath the 78. That's what they say, which is just crazy because your stop loss can be absolutely huge, right? So they jump in here 61. So when if I show you this on a lower time frame, I'm pretty sure there's going to be some kind of rejections here. We don't jump in off of no fib level. We jump in based off institutional and smart money concepts, right? The institutional concept here is that there is an institutional candle right here, a bullish order block. This is where they need to go to 100%. So when the retail traders that get a small little 1-2 bounce, yeah, 10 pips, 20 pips, they will be stopped out 100%. They will be stopped out because if everyone's jumping out at 61, the banks make money when you lose money, right? Yeah, they will stop you out easy, right? And so you're going to get a bounce. Those who don't risk free their trade, retail traders, they will lose money. Those who risk free their trades, they will make pennies, or like let's say 2 pips worth or 10 pips or whatever it is, right? But yeah, I was gonna say. Cool. But we wait for the institutional candle, right? So we don't jump in based off a fib level. So we can use this to know when something is at a discount or a premium. So in this case, because we're bullish, right? So 61 is a discounted price for GU at the point. 78 is heavily discounted, 88 heavily discounted, so on and so forth. So I like it when price is heavily discounted and we're buying, right? But if there's an institutional candle here, this is going to be my main point of focus, right? Cool. So let me delete that. So now this is what you would do. Look, make sure you guys still here. Still here. Okay, you're still here. Cool. So now when price trades into not this one, no, let me bring this back. Right. And yeah, because some retail traders jump in off of the what is this? The 38.2% down here. Right, as you can see, it traded into the imbalance, traded into it. But this is just a small this bounce is just so small, you get pennies out of that, right? So I just want to show you the reason why we don't use this one because price is not at a discount yet. Yeah, we need to wait for price to be heavily discounted, and we look for institutional candles and smart money, institutional candles basically at discounted prices for our entries. Yeah. So now let me quickly delete that. So now 2 things. So that was 1. Okay. Right. Well, 3 things. Second one is we wait for it to trade into the institutional candle. So in this case, it's a bullish order block. Then we get our entries for the upside to buy. Yeah. But if you want to pinpoint that entry, right, you always mark up 50%. You always mark up 50% of the institutional candle, whether it's the last up close or down close candle or bearish or bullish order block, right? Any one of those, you always mark at 50%, right? And as you can see, what happened, price traded directly straight into that 50%. This was probably just like pipette off or something, right? That's one. Yeah. So that's the second thing I wanted to talk about regarding this order block. The third thing is that look at where price traded into our banking level. So when we're on a 1 minute time frame, okay, selling GU, we scale off at the Asia lows, and then we let the rest ride to the banking level 20. Look where this price comes in at. This price, we're 50%, right? Coordinates comes in at 20. Can you see how everything's aligning up now? So what we're doing on the 1 minute time frame, we're keeping the high time frame in mind. Yeah. So it's not that we're just holding on, we're just selling. We don't know how low it's gonna go. We know how low it's gonna go, right? We know how low because it needs to pull back to a certain point. And we've identified this area as this is the point we want it to pull back to. I don't know. Have I gone over time? I think I have. So good. Cool. Yeah. So it pulls back. Yeah. Not only to the institutional candle, which is our bullish order block, but specifically to our banking level, which is at the 35.20. Right. So when you guys are, trading on that 1 minute time frame, and I'm telling you guys, where's the next banking level? There's reason for this. Go to the high time frames, find out what's going on the high time frames, break it down, and then you can start to see on that 1 minute time frame why we're scaling off at Asia lows. Asia lows probably came in. Somewhere in this wick. Yeah, they will let the rest ride to the banking level. Yeah, ideally it was 50% here, but at the same time it was at 20. You see it. So everything's aligning up. So not only is going to 20, it's also going to our institutional candle as well. Okay. So that was very long-winded, but I just wanted to give you an example. Hence why I'm bullish still. Yeah. And then with that in mind, you buy. And then this move here was a beautiful move anyway. But from the 20s, why did it stop? From the 20s, this is a 200 plus pip move, right? Which is good, right? And then look, equal lows again. Equal lows generated down here. Okay, they run the equal lows. Yeah, they break above the short-term high. You stay bullish. if they did not beat the short-term high, I now start to think, cool, we're going to break lower. Okay, we're going to break lower, and then we'll start looking at something else. We're going to start looking at, okay, cool, there's an imbalance down here. You know, this could be a target. They could, you know, just, and we investigate the leg up, put it that way, right? And so we stay bullish, right? So now this is why on the 1 minute time frame, well, let me go to this one over here. This is why on a 1 minute time frame, and as you know, brokers do different things. So just giving an example what brokers do, because you know brokers are all sketchy. Look at GU on FXCM. You see how it's breaking lower. And look at GU on forex.com. You see how it's pushing higher. So GU on FXCM is at 36.89 right now, and GU at on forex.com is at 37.08. So you can see the difference just depending on your broker, right? So this is why on a 1 minute time frame now, come on, slow it up. So this is why on a 1 minute time frame, I always tell you guys, look, check this out. Just remember the banking. You have to kind of combine everything you're learning. So this is why it's not just like you come here for a couple of weeks and then now you're rich. No, you need to learn the concepts first. You need to combine everything from the high time frames to the lower time frames and know exactly what you're doing. And so, for example, this is why now, for example, like I explained down here, Asia low comes in here, right? So let's use the highs. Asia high comes in over here. Okay, Asia high comes in over here. So we know automatically once you mark up your Asia session, you know you're looking for this Asia high comes in at 27, right? You know you're looking for 50, which is the next banking number, which is up here somewhere 50, right? And so you know once market flow switches from this downtrend on a 1 minute time frame to an uptrend, you know where you're targeting. Not you're gonna so when retail traders are targeting these different highs, we're not target we target liquidity. We know there's money up here at Asia highs, and we know there's money at that banking level, and hence why, for example, once it gets up here, okay, banking level 50, right, 50 down here. This is where you would jump in with a sell and you ride it down, and you would investigate this whole leg up, look for that lowest imbalance. But in this case, we're not looking for an imbalance because there's a double bottom down here. All right, so we're looking for this to get taken out down here. Cool. Cool. I think I have more questions actually. So I'm in the chat group or on Telegram. Yes, we are still here. It's helping. Good. Yes, good stuff. Good session. Yes, 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 still here. And I think it was on Telegram. On Telegram. Okay, Telegram. Let's see what else is. I think a few more questions came in on Telegram just a moment ago. Oh, just one. During intraday play, we know our potential targets are the Asia highs, lows. When swing trading, what highs, lows are we looking to take out? Is it the high or low of the previous day? Yeah, when swing trading, so just as an example, one day, right? When it's swing trading, see, this is when I used to, back in the day when I used to do, well, it wasn't support and resistance. It was support and resistance a little bit different to how retail traders do it. But yeah, so all like equal highs over here. You got this last up close candle. So I'm just looking at some stuff. Last up close candles over there. Cool. Yeah. So when swing trading, can you switch for me? I think my internet might be down. Hopefully you guys are still there. Cool. So when swing trading, you look at the higher time frames. Okay. So swing trade, you only swing trade if you're looking at the higher time frames, and you would target all of this stuff, right? So now look at this monthly time frame. If I go to the monthly time frame, okay. So just look at what needs to happen, right? So you know what? I'll give you EU as an example for swing trading, right? So monthly time frame again. Okay. So well, you know, this is going to be my analysis anyway. So you guys are seeing it. So monthly time frame. What do we see? So we see all this action here. Okay. Whew, look at as clean as day. Look at this. So this just gets me excited, man, because I know price wants to come up here. It needs to come up here. It wants to come up here. This is going to be a target zone. Then we have equal highs up here. Okay, we've got a daily imbalance up here. So yeah, daily imbalance over here. So just different target points that you can just target, right? So yeah, they need to get back up here. These guys are in drawdown. They're in drawdown here. Yeah, they're in drawdown here. Right, they're in drawdown. They're heavily in drawdown, and so they've been in drawdown for since 2014, right? So this is their one chance to try and get back up here to go and mitigate their position. But they can hold it for not. They can hold being in drawdown for a very long time. And at the same time, you have to think about there's other things you have to take into account too. Because if you're selling EU, right? And I'm not too sure whether you guys know this, but if you're selling EU, if you're holding that sell overnight, you get paid, right? So you have to think about it just think about it, just not like a retailer, right? So if a bank, obviously banks are trading, thousands and thousands of lots, right? Just crazy amount of lots, yeah. And if they're selling EU and if they hold the EU sell, they get paid, right? So in other words, you get paid twice. So they've been selling, so they're getting paid, and they're also getting paid from the swaps. So they're making like even more money, right? And so they've been selling for time. This is why EU's been in a massive downtrend since 2008, right? Since 2008, EU has been on just a downtrend, right? Because and the reason the banks are holding this is because they're getting paid twice. They're getting paid from selling, right? So they're getting paid from selling it down because it is falling, and they're also getting paid from holding the trade overnight. Every single time they hold a trade overnight, they get paid. Oh, it's crazy, right? So, and with imagine trading like what 10,000 lots, right? 10,000 lots. So let's just say, for example, if you had traded on one lot in EU and your payout every single day is like I think like £3 something if you hold it overnight, right? Imagine trading 10,000 lots or 100,000 lots. They're getting paid tons of money, right? So yeah, just bear that in mind as well. Just different things. Okay, cool. Now check this out. Monthly time frame. What's happening? Right, downtrend since 2008. Okay, we gets to a point. Then draw down here. Massive inefficiencies. You can see. Look, all this stuff, all kinds of mitigation. Everything's happening in this little area down here. Lots of consolidation, really, right? And then we have the last up close where then draw down. So we bear that in mind too. And now it gets down to here. The price, well, look what's offered to everybody, just sells. So only sales have been offered to people, right? There's been no buying action here. So there's inefficiencies all the way here. There's inefficiencies. There's just tons of inefficiencies, right? So now we move down here, okay? What do we see down here? We see consolidation, some kind of Wyckoff accumulation, okay? And this is obviously when it comes to Wyckoff, right? I don't use Wyckoff, by the way. I don't use it, but I'm not saying it doesn't work because I know it does work 100%. But yeah, people use Wyckoff, and when it plays out nicely, it's beautiful. Everything's blessed, and yeah, you can track it. You can do the Wyckoff. I dabble in it every now and then, but yeah, I don't use Wyckoff like that. Like I trade my institutional smart money stuff, right? But you can see it happening here. You got the spring, okay? You got the spring over here, okay, and then it expands up. Then you get the this will pull back into the imbalance for the next play, right? But I just wanted to just point out something to you. So we have equal lows here, equal lows, okay, down here, and then they run out liquidity. They break above the short-term high, so it could be either one, this one or that one. That takes out the liquidity. Yeah, it pulls back into a last down close candle, right? Lower time frame. There's probably some kind of imbalance down here. Okay, to the perfectly right into that last down close candle. Remember, with institutional candles, you always mark up 50%. Okay, always mark up 50%. So, and because that's where most of the volume of the buy is going to be, right? You always mark up 50%. And then what happens is this: price trades into it, okay? Price trades into it, and then it expands, right? So now, in order for this to continue as an uptrend, yeah, it needs to break above this high. The body, it needs to beat here. It needs to beat this right here, okay? And as you can see, it's tested the last down up close candle once here, tested it, and it's tested it 2 times. So in other words, in order for this to be an uptrend, it needs to beat this high down here, right? And so if it beats this high, then we know GE wants to trade higher after a pullback, okay? If it does not beat this high, then we're going to be targeting something down here, okay? And so give me 1 second. I need to just make sure I'm answering the question as well before I forget. And okay, yeah. So target points, right? So now, target points for when you're swing trading, right? Your target point. So, for example, in this case, it would have been this this last up close candle first, right? So target points for swing trading is different to intraday trading, right? Intraday trading, we use the Asia range as target points and banking levels. When it comes to the high time frames, you look at previous highs. like these points here. But you have to understand what's going on in the market. So if this is like a reversal to go higher, you know they need to beat this. So once they beat this, for example, or there's two things: you either take profit at the last upclose candle, or you take it after they're taking out the high, yeah, taking out the high, yeah, and then you would target ultimately a order block like this, for example. Yeah. And it's not saying you can't take partials along the way and everything else. You take partials whenever you need to take partials. But when you're swing trading, you look at the higher time frame and you base off of that. So I see a push up, I see a play into an imbalance and then a push. So now what happens is this: if it breaks above this high, when it pulls back, not saying I'm not going to jump into a sell, when it pulls back, I'm going to wait for it to trade into an imbalance. So yeah, somewhere here, or a last down close candle, and then I'm going to take it higher, and then a target point could be where they're in drawdown because they need to mitigate that position, right? So I think I kind of went around there, but hopefully that answers your question. When you're swing trading, you target highs, daily highs, monthly highs. So liquidity points are monthly highs, daily highs, weekly highs. You target all of those highs, right? Or you target like institutional candles as well, but on the daily time frame or the high time frame. Cool. Let me just quickly check. Shit marks. Cool. All right. I think that's that for this week then. Yeah. So as you can see, I'm still very bullish on GU. I'm still very bullish on EU. I don't really trade nothing else. US 30. US 30. I really want US 30 to come back up here because it kind of played me a little bit. Like I just wanted it to drop, but it decided to come back real quick. Where are we? US 30. Got a 50-minute time frame. I just want to see what I can show you. Is it? I think my internet's a bit slow today. Okay, cool. US 30, this is where I wanted to come up to, this right down here. So first of all, we were in from here, okay? So in from up here, and that was completely fine. That was blessed. It ran out to equal highs, tapped us in and dropped like tons of pips. Then it came back to come to this area again. No idea why, but look at what it did. It left a up close candle and an imbalance, right? So this is why this is my area for US 30 up here. So roughly about 31 to 10. 31 210, right? So this area down here, but obviously I'm not going to just wait for the imbalance play. I'm going to wait for this candlestick because it's not been mitigated yet, right? So this candlestick here is the last up close candle. This is where I want it to return to, right? Before dropping again. And I just want this thing just to drop. It's already taken out tons of liquidity points, so look, equal lows down here. Tap that one. Tapped, I think it's taken out this one too. Let's see, yeah, it's taking out this one too, this liquidity point here too. So ultimately, if I zoom back out now, so let's go to the 4-hour time frame. Once it decides to, okay, cool. Once I zoom back out now, once it gets up here, yeah, once it gets up here, I want it to take out this liquidity and then ultimately take out this one over here too, right? And there's this right here, imbalance right here that it needs to come and sort out. That last down close candle is where I want it to tap into to the T, right? And then I'm done. I will close off US 30 and then yeah, I wait to see what the next play is. But this whole move is like 5,000 points on US 30. So yeah, that's my play for US 30. For gold, question. Last question. On the 26th, there was a GU buy trade. I was hesitant to enter as I didn't come directly to a banking level, nor did I see a smart money reversal. Could you go over that trade, please, as to why you took it on the 26th? Okay, let me see. Okay, cool. And I think that'll probably be the last thing I do. 26. All right, let's go. The 26th. So when was that? Not there. Okay. So you need to tell me which one you are referring to. Which one are you referring to? So we're on the 26th right now. We've got the Asia. Oh, question. I think. Yeah, definitely. So yeah, that's fine. EU and oil are the only pairs that I know pay positive swaps. Everything else is just mostly negative. But yeah, like you said, it depends on your broker as well. But yeah, EU, and by the way, they do change every now and then. So with the swaps, most of the time EU's been selling, right? There's been positive swaps, okay. but they do switch it every now and then. So obviously you check you on MT4, you click on the pair, so your USD, go to details, and then scroll down to where it says swaps, and then it will let you know whether what your charge would be if you hold it overnight, if you're buying and if you're selling. So yeah, good point, good point. The first entry point. Okay, cool. All right, lovely. So okay, last thing I'm gonna go through now is first entry point. Okay, so but 26 Asia range. Yeah, top, bottom, top, bottom. We know Asia lows comes in at 32. So the next banking level is 20, right? The next banking level is 20. So automatically I know that at 20, and if I'm bullish on GU, I will enter at 20, right? Or roughly about 20 anyway, right? Asia high comes in at 77. So when I'm saying 77, I mean, like, I don't know whether you guys can see the actual numbers because obviously the screen is really small, but Asia high comes in at 77. So automatically the next banking number for me is not 80, which is 3 pips. No bank is going to have a 3 pip stop loss, right? The next level will come in was 3700, right? So this is why 3700 here was the target down here, right? So this is as simple as it is, right? It breaks out of Asia. Okay, so I always tell you guys, there's different liquidity runs, right? There's the Asia breakout, which is normally harder to guess, or sorry, to get, right? There's then after the Asia breakout, there's then the either a continuation, okay, which is a continuation lower. There's the reversal, which is to go and take Asia highs, right? And then there's the New York taking the London stop losses. So in London, they take Asia stop losses. In New York, they take London stop losses, right? So you have to decide, okay, cool, this is the one I want to focus on, right? So this trade was pretty straightforward actually. So this one here was yeah, Asia lows broken out. Okay, I'm bullish on GE because I've showed you what's happening on a higher time frame. Once it gets to my banking level, I am in the trade. You see it? Once it gets to my banking level, I'm in the trade. So what would happen is once it gets to 20, right? So 20 comes in roughly about here, yeah. Once it gets to 20 down here, this is where ideally I'll be in the trade down here, right? And then normally what I would do is I'll have a 5 pip stop loss. Okay. At banking levels, I would normally have a 5 pip stop loss. Okay. Normally have a 5 pip. There are times I have smaller stop losses too, right? And so in this case, on the first one, I would have been stopped out. Okay. But obviously I didn't enter at 20 on this one here. Okay. But yeah, so I saw GU down here. This is where I saw GU. I saw that I got to my banking level, which is roughly about 20, right? And I was messing around over here. So this was my first entry point. So when it came in at 13, right? 13, right? And so the reason I was in this trade was because first I am bullish on GU, right? It's at my banking level. And then what you're going to see at a banking level is sometimes they tap it to the T and they move. Other times they work the level, right? So in this case, look what they're doing. They're working the level. There's lower lows, lower highs, right? This here, another lower low. They break above here, okay? And then they start doing all this madness. So now once they've broken above this high over here, yeah, I know 100% that they're now going to go higher. Okay, if they break above this one, that's even more confirmation. And then what you would do is you would normally wait for a pullback into an imbalance or a last down close candle. So there were many down here. There was one down here too. Okay, there was one down here, a little small one. But just like I said, you always what you want to do is you want to at least have 2 attempts, right? So you know, for example, if they're going to break lower than this, they're going to come down here to this last down close candle. Yeah, but in this case, you see how they never did it, right? So this is why you always identify at least 2 imbalances, right? Always identify at least 2 imbalances. You wait, you either wait for the lowest one, okay, but it's your decision to wait for that lowest one, or you catch one of these ones. As you can see, though, look, pushed up, pushed down, clean up the they tapped into the last down close candle, pushed up, tapped into the last down close candle, pushed up. This one was let's just look at the high. High came in at 36.20. Lost it. There it is. The low came in at 36.17. So they tapped into the imbalance again and they pushed up. So when you see this stuff, right, they are very bullish. You see it, yeah, they're very bullish. So in other words, what's happened? They've run Asia lows, they've taken that liquidity, right? They've taken that liquidity, they've come to our banking level and they've worked the level and now they're pushing up. And now they're pushing up, right? They're pushing up. So this is what you would do. And then what you would do as well is when it comes to liquidity, so this is the London highs. This is where London high comes in. So if this is in the New York session, you will target the London highs. Yeah. And then you scale off more at Asia highs. right? If this is the London session, you would not target your own stop losses. Or if this is the London session, you will target Asian stop losses. That's what I'm trying to say, right? So hopefully that answers your question. So, and then down here, let me see if I'll give you another example. No, I'll just stick to this one here. So in other words, they worked the level and then they pushed up. Yeah. So I'm very bullish on GU. Okay. So that means once they get down to this level, I'm expecting some kind of push up. You see it, right? So if I was bearish on GU, I would not be looking to buy from down here. Okay. Unless, for example, it was the New York session that the market flows reverse. I'm going for some kind of London high stop losses, right? But yeah, so once again, they work the level at your banking level. Okay, they work your banking level, and look, put it this way as well. If they wanted to go lower, they'll keep producing low lows, lower highs. They don't want to do that. So this way you bring out that continuation tool, and then you just keep on waiting. So for example, I'm bullish on GU. I'm not going to be looking to take it. For example, I want to take a trade when the market flow switches, right? So this is what I will do. So continuation again. You mark up the low, you mark up the high, yeah, like this, and they're pretty cheeky as well. Okay, so they're very cheeky as well, because sometimes look what they do. So they break beneath the low just a little bit, right? Just a tiny bit, like 1 pip, and then they continue to move higher. So I've noticed that as well. So look, low, I mean high, low, okay, and you wait for one of these areas to be broken, right? And then for example, the pullback is going to be a pullback for a move down, right? This here, I was not convinced. This was not convincing at all, right? This was not convincing at all. I like to see them push beneath, push, break all the way down, and then come back up. This is not convincing at all, right? This is nothing for me, right? I want to see them proper break through some highs. So you see how when they broke through this high over here, they broke through here, they pulled back, and they continued, right? I want to see some kind of with some intention. If I get this stuff like this is not convincing enough for me, right? This is not convincing enough for me. So yeah, so this was the reason I jumped into this trade, and then you just caught high lows. So for example, you caught imbalance plays, and trades into last unclosed candles as well, like this, and then you continue to buy. I think there was one more, and then there was this one over here. Okay. Ultimately targets were 3,700 over here. This is where my target points were. So I know no matter what happens, I'm going up here minimum over here. Okay. So no matter what happens, I'm going up here 3,700. I don't think there's anything else to say. So I think that's it really. There's nothing really else, anything to say. So beneath your Asian session, you go to the next banking level. You either wait to see what they do there, or you jump in off of the banking level if you're bullish. If you're bearish in GU, then yeah, I just say just wait, because you can get continuations. But when you see stuff like this, where there's only sell side trading, right? They need to clean that up. They're not just going to leave. They need to clean up, right? And so this is why I stay bullish. So there's so many different things that keep me bullish. I see this, I stay bullish. Yeah. I see imbalances and last upclose candles, I stay bullish. I see imbalances, I stay bullish. They didn't snatch Asia highs, I stay bullish. Okay, then I look to the left to see what else is to the left. So I say if they get to the banking level, what do they do to the previous day? They take out all this liquidity above here. I stay bullish. And then I look again. Okay, cool. So I see equal highs. So that means this trade here, I'm going to hold. I'm going to scale off, and then I'm going to hold till they run out these equal highs. But at these equal highs, there's also Asia highs that haven't been taken. So then I look for the next Asia highs above here. So 3723, right, is the Asia highs. And sorry guys, I'm going into so much detail, but this is hopefully this is helping. Is like normally I go for the charts and stuff like that and say this is what I want, this is what I want in the charts and blah blah blah. But I thought, you know what, this might be better just to go into more detail like this, right? And then I look to the left, I see Asia highs. Asia high comes in at, let me move this out of the way. Asia high comes in at 37.23. So then I know I need to hold to 37.50, right? 37.50, that's what I know I need to hold to. And so you hold your buy, to the point where you get to 37.50, right? So this 37.50 roughly about somewhere down here. Okay. So this is where you hold your buy to. Oh, with these trackpads, man, they're so sensitive. Okay, cool. So give me a second. So this is where we're down here, 37.50. So this is where you hold your buy, all the way to 37.50, and then you scale, you close your position, or you scale off, or you do whatever you want to do, right? And if it starts showing you some kind of reversal signs, right? If it starts showing you some kind of reversal signs, then you go the other way. As simple as that, right? Cool. I think I've got more questions in here. Okay, it's helping. Keep it going. Okay, cool. That's gonna be the end. Hopefully that helped, man. Because well, I know it's helped you guys, but yeah, I just really wanted to go into detail today and just show you some of the things that I look at and answer your questions as well. And guys, like I said, if you have any more questions, let me know in the group. I'll get to them as I can. And yeah, that was a very, very detailed session. I don't normally go into that much detail. Well, I do go into that much detail, but it's just never as this long, right? So yeah, hopefully you guys took some kind of nuggets from that as well. And yeah, there's so many things you have to combine. So let me quickly just let me quickly start this now because it will be the crazy long recording. How do you stop? Oh, snap. There you go.